Welcome to my channel. I'm Scott, and in this video I am going to walk you through the process of valuing Meta's stock by analyzing their financial statements and dissecting their financial ratios so we can determine if it's a buy or a sell. Meta is the parent of Facebook, Instagram, and many more. It is considered one of the world's most valuable companies. It generates a substantial part of its revenue from the sale of advertisement space on its various platforms. It has 3.6 billion monthly active users, which makes up 46% of the world's population. In 2012, it acquired Instagram for $1 billion. This is considered the best acquisition ever. In 2014, it acquired WhatsApp for $19 billion. In 2014, it acquired Oculus for $2.3 billion. In 2020, it acquired 10% of Jio Platforms for $5.7 billion. Jio is an Indian company and the third largest mobile network operator in the world, with 500 million subscribers. The word Meta comes from the Greek language and means beyond. The company changed its name to reflect its long-term focus on building the metaverse, a digital extension of the physical world by social media, virtual reality, and augmented reality features. It plans to spend $29 to $34 billion this year to invest in AI, servers, and data centers. Oculus already controls 28% of the virtual reality market share. The company is headquartered in Menlo Park, California, and was founded in 2004. When the company IPO'd in 2012, it had 845 million monthly active users, and its website received 2.7 billion likes and comments daily. It is still one of the largest IPOs ever. The ticker trades on the Nasdaq, Deutsche Börse, Mexican Bolsa, Euronext Paris, Xetra, Vienna, Swiss, Santiago, Kazakhstan, Sao Paulo, Italian Bourse, Lima, Buenos Aires, Bulgaria, Ukraine, and London Stock Exchange. Let's get started with the model. This is a large cap company, 587 billion market cap. They're trading at $2.16 a share, and they have 2.7 billion shares outstanding. Let's look at their financials. The way you value a company is you estimate the free cash flows into the future, and then you discount those numbers back to today's value. That's what we're doing in this video. And free cash flow is cash flow from operations minus capital expenditures. Their free cash flow goes up every year from 15 billion up to close to $40 billion. Net income is the profit or loss on the income statement. It's revenue minus expenses, and that grew from 22 billion to 39 billion. Revenue is a sales for the company, and their revenue is unreal, 55 billion up to 118 billion. This is the company's income statement. The top line is the revenue of the sales. Below that is the cost of revenue. These are the expenses directly related to generating the revenue. The cost to maintain its platforms is part of cost of revenue. Revenue minus cost of revenue gives you your gross profit, and that more than doubled from 2018 to 2021. Below that is their operating expenses. R&D is their biggest operating expense. Also, marketing is a big operating expense for this company. Gross profit minus operating expenses give you your operating income, and that doubled from 2018 to 2021. They don't have that much debt, so they receive more interest on their investments than they pay in their debt. So their net interest income is $461 million. Then you have other income and expenses. These are all the gains or losses not part of the company's core operations. An example of this is an asset impairment. Below that is their pre-tax income, then their taxes, and the bottom line of the income statement is their net income, which was their highest ever in 2021 at 39 billion. This is their income statement from their 10K, 2019, 2020, and 2021. The top line is the revenue, the sales. That was 118 billion in 2021. Almost all their revenue comes from advertising, 115 billion. They did receive 2.3 billion of revenue from Reality Labs, and that doubled from 2020, and their 2020 revenue more than doubled from 2019. Reality Labs includes the sale of Oculus, also other virtual reality hardware and software. And most of their advertising revenue is a sale of ad space on Facebook, Instagram, Messenger, and WhatsApp. Their monthly active users goes up every single quarter from 2.9 billion to 3.6 billion. That's why they make so much money in ad space revenue, because there's so many eyes looking at their platform. And a majority of these 3.6 billion people look at their platform every single day, multiple times a day. Facebook has the most monthly active users of their services, and that also goes up every single quarter from 2.5 billion to 2.9 billion. US and Canada makes up the smallest part of this. Asia Pacific is 1.3 billion. Europe is 400 million. The rest of the world is 945 million. Pretty much every single quarter, it grows in every single region. The average revenue per person is going up. It's the highest ever in the fourth quarter of 2021 at 939. Here's a breakdown of their revenue by location. US and Canada is 52 billion, Europe 29 billion, Asia Pacific 27 billion, the rest of the world is 11 billion. And every year their revenue grows in each country. Their cost of revenue is 22.6 billion. So their gross profit is their revenue minus their cost of revenue. Their gross margins are gross profit over revenue, which is 81%, which is just unreal. You don't see gross margins like this. Much higher than their industry. And their net margins are 33%. That's net profit over revenue. Anything above 20 is just amazing, and they're above 30. Here's a breakdown of their advertising revenue, their operating income, and their operating margins by quarter. The reason the stock went down a lot in the fourth quarter is because their operating margins are decreasing, because they had an operating loss of 3.3 billion on Reality Labs. They had a record high advertising operating income in the fourth quarter of 16 billion. Once they just break even, I'm not even talking about making money on Reality Labs, the stock will go up. And when they're profitable on Reality Labs, it's just going to break records of stock. They're spending more on R&D than ever before, 25 billion. That's mainly from their AI and virtual reality part, 14 billion in marketing and 10 billion in general and administrative. Even with higher expenses, they still had the highest operating income ever at 47 billion, 15 billion more than 2020 and double 2019. Their net income goes up 10 billion a year, 19 billion, 29 billion, and 39 billion. The stock has really struggled this quarter because of their fourth quarter earnings. And look at their net income for the fourth quarter, 10.3 billion, which is higher than the third quarter, almost as much as the second quarter. This stock should not have gone down 30%. If you look at these numbers, no one would suspect the stock should have went down 30%. This is the company's statement of cash flows. The top line is operating cash flow. That's how much cash the company generates from its operational business. And that doubled from 2018 to 2021. Some companies have been in operation for over 100 years, and if you sum up all their 100 years of cash flows, it does not equal 1 year of Facebook. And they're spending more on CapEx than ever, almost 19 billion in 2021, and they're going to spend more in 2022, but they can afford it. Operating cash flow minus CapEx gives you your free cash flow, and look how much free cash flow, $39 billion. It's just unbelievable. They do not pay a dividend, but another way to reward shareholders is to buy back stock. Look how much stock they bought back in 2021, $44 billion. When a company buys back stock, it decreases the shares outstanding and makes your shares more valuable. And before 2021, they bought back 6 billion, 4 billion, and 13 billion. And they don't take on debt. They pay down debt every year as well. This is the company's operating cash flows from their latest 10K. This is the first part of the statement of cash flows. The way to calculate operating cash flow, you start with your net income. Then we have to add or subtract the non-cash items on the income statement. We have to add back 8 billion of depreciation and amortization. We have to add back 9 billion of stock-based compensation. Stock-based compensation is a way to pay employees with stock or options. This is a non-cash item, so it brings down your net income, but we add it back on the operating cash flow section. You'll never see stock-based compensation on the income statement. It's part of the other numbers. It's part of research and development, and it's part of marketing. And then we have to adjust for changes in working capital. They extended 3.1 billion of credit. When a company uses accounts receivables, it's a cash outflow for that reporting period. But when the customer pays for the item, it'll be a cash inflow in that accounting period. They reported an accounting profit of 39 billion, but actually generated 58 billion of cash flow. Last year, they generated 39 billion of cash flow, the year before 36 billion. The stock tanked in the first quarter of 2022 due to their financials from fourth quarter 2021. And look at these numbers. It's just unreal how irrational the market can be. My two favorite numbers are revenue and cash flow from operations, because it's harder for the company to influence those numbers using accounting tricks. And look at their revenue like a rocket ship from 2015 to 2021. And their operating cash flow also goes up quite a bit as well. Just amazing numbers. And their revenue is forecasted to keep growing close to $180 billion by 2025. Their operating cash flow is also expected to grow, although the growth is not as aggressive as their revenue growth. This is the company's investing and financing sections from their statement of cash flows, 2019, 2020, and 2021. The top line of the investing section is investments in property, plant, and equipment. That was $19 billion, up from $15 billion. They have a lot of cash on their balance sheet, so they always buy and sell lots of marketable securities. So in their investing section, they had a cash outflow of $8 billion. Last year was a cash outflow of $30 billion. The big difference was this purchase of equity investments. They spent over $6 billion in investing in other companies. In their financing section, they bought back $44 billion of stock. When they give their employees Facebook stock, they have to pay taxes on that, so they paid $5.5 billion of taxes. So in their financing section, they had a cash outflow of $50 billion. This is the equity section on their 12/31 balance sheet. They have $125 billion of equity. They raised $56 billion from selling their business, and they profited $70 billion from running their business. So when they buy back stock, they reduce retained earnings. So their retained earnings would be a lot higher if they did not buy back stock. Let's look at the capital structure. $125 billion of equity, $14 billion of debt. They're 90% equity, 10% debt. They could pay off all the debt with the cash on their balance sheet and still have $34 billion of cash left over. Since 2015, here's their equity balance, their cash balance, and their debt. Look how well run this company is. Their equity goes up every single year, and their debt is pretty much irrelevant, while their cash balance increases each year as well. And I gave them the highest whack on Finbox, 8%, because lots of people are bearish on this stock the past couple of months. I want to try to make my model as conservative as possible. 8% is a discount rate we're going to apply to the future cash flows. We estimated 4 years of future free cash flows. We also estimated a terminal value, which is all cash flows past year 4, that's $830 billion. We discounted those numbers back to today using the weighted average cost of capital. We get a value of the company of $748 billion. We divide that by 2.7 billion shares. And we get a calculated stock price at $274. They're trading at $216, so they're trading at a 21% discount. It's a buy according to the model. Their revenue is projected to grow 12%. I cut that in half to be conservative. I grew it 6% for the next few years. That's how I got their future revenue estimates. And to get their future free cash flows, I need to see what percent of their revenue they convert to free cash flow. So I summed up these 4 free cash flow numbers and I divided by the sum of these 4 revenue numbers. And that comes out to 30%. So I multiplied their future revenue estimates by 30%. That's how I got their future free cash flows. Even in this extremely conservative model, I'm still coming out of the stock price a lot higher than it's trading at. But I think the stock price should be close to $400 based off of how much revenue and free cash flow this company brings in. Simply, Wall Street's valuation is $638. They're saying the stock is 65% undervalued. 43 analysts priced this stock and the average price target is $332, the low is $225, the high is $466. This is where the stock has been trading the last 2 years. And right after the COVID crash, the stock doubled pretty much the next year and a half. But investors did not like their fourth quarter results. They beat revenue, but they fell short of earnings because they're investing so much in the metaverse. This is a great time to buy. I probably would sell some stock to buy this, but I have so much invested in Facebook already. They have a beta of 1.29, so the stock moves a little more than the market. It's gone down 19% in the past 52 weeks, while the S&P is up 14%. The 52-week low is 212, the high is 384, and the stock is on a major decline, trading below its 50-day and 200-day moving average. A ton of trading activity the past 10 days. Nearly 80 million shares are traded each day. Most of the shares outstanding are on float. 79% are held by institutions, and 1% of the shares are shorted. The company is always growing organically and through acquisition, so their employee count goes up each year. They currently employ 72,000 people. If you invested $10,000 into this company when they IPO'd, you would have been at over $100,000 recently. But if you're still holding on, you'd be at $65,000 today. That's a 21% annual return. In the past year, there's only been insider selling, and this is pretty much all from Mark Zuckerberg's foundation. 69% of the shares are held by institutions, 16% by insiders, and 16% by the general public. The biggest shareholder is Mark Zuckerberg, the founder and CEO. He owns 13% of the company, 347 million shares valued at $77 billion. Then Vanguard, BlackRock, Capital Research, and Fidelity. They have amazing price multiples, a PE below 15. For a company that grows at this pace, that is just an unbelievable PE ratio. PE, a stock price over earnings per share. This means investors are paying $15 for $1 of earnings. When a company has a low PE below 15, you would expect their revenue to be stabilized. But to get a PE below 15 at a company that's growing at this pace is unheard of. Their price to sales is 5.0, that's stock price over sales per share, and their price to book is 4.7, that's stock price over book value per share. Let's look at their non-current assets. 6.8 billion of equity investments. These are their investments in geo platforms. 58 billion of property and equipment. 12 billion of operating leases. 19 billion of goodwill. Goodwill is the premium you pay when you acquire another company. And they have 2.8 billion of other non-current assets. Look at their return on invested capital, 41%. That is just unbelievable. Their ROE is 32%. That's net income over equity. They provide an amazing value to their equity holders. They can cover their current liabilities more than 3 times with their current assets. They have 31 billion of marketable securities. The 31 billion consists of 16 billion of government securities and 15 billion of corporate debt securities. So pretty low risk investments. They have 14 billion of accounts receivables. This is how much money other companies owe Facebook, and 4.6 billion of prepaid expenses. A prepaid expense is when a company prepays for an item they're going to receive in the future. It's initially recorded as an asset on the balance sheet and then expensed over time onto the income statement. Say the monthly rent at one of their facilities is $1 million a month. The landlord requires 12 months up front, so they pay $12 million and carry that on their balance sheet, and then each month remove $1 million and put it onto the income statement. Let's look at their current liabilities. 4 billion of accounts payable. This is how much money Facebook owes other companies. 1 billion of partners payable. It owes 1 billion on its operating leases. 14 billion of accrued expenses. These are expenses the company has incurred but hasn't paid yet, and $500 million of deferred revenue. Deferred revenue is when a customer prepays for a product or service that Facebook will deliver in the future. Their free cash flow in 2021 was 39 billion. They have 45 billion of working capital, so the company is really well funded. They're very well capitalized. The best way to look at ratios to compare them to companies in the same industry. There are 71 companies in the same industry as Meta. The only company that spends more on CapEx than Meta is Google. They have a really good debt to equity ratio. They generate tons of free cash flow. They have the second highest market cap, and their price multiples are unbelievable. Look how much better they are than Google. A PE of 15, Google's 24. Price to free cash flow of 15, Google's 27. And price to sales of 5, Google is 7. They bring in tons of revenue. They're growing more than Google. Not as much as Snap though. They have amazing ROA and ROE. To summarize, I have them trading at a 21% discount. And if all the people who sold Facebook watched this video, I think they would think twice. You can see how good of a deal it is now, the stock. To have half the world as a customer is a huge asset. I'm really excited to see Facebook prove everyone wrong on the metaverse and become the largest company in the world. I rank their free cash flows 10 out of 10, their revenue 10 out of 10, and their ratios 9 out of 10. So let me know what you think. Give this video a like, subscribe, or comment below. Also, if you'd like to get a custom valuation or just support the channel, you can become a member by clicking on the link in the description below. Thanks for watching.